Hello, this is Coach Mark from Tackle Trading. It's my honor to bring you the second video in the Decoding Buffett series, The Architect, Charlie Munger. You cannot tell the story of Warren Buffett. It is impossible without telling the story of Charlie Munger. He had such a massive influence, and this legend recently passed away at the age of 99. But he was not only Buffett's friend, he was not only Buffett's business partner, he played a pivotal role in shaping the way Warren Buffett viewed investments. And because of this, Buffett honored Munger as the architect of the entire success of Berkshire Hathaway. We'll go into more detail in the coming minutes, but if you had to narrow it down to one thing to summarize the influence Munger had on Buffett, it was this transformation from undervalued assets, where Buffett would go out and find something really, really, really cheap, to more high quality businesses with a long-term vantage point into the future. And this transformation was critical in not just the success of Warren Buffett, because Warren Buffett would have succeeded on some level, but in having Warren Buffett become Warren Buffett. So I always like to know a little bit about the legends of history, just some of the details in helping shape who they became as a person. Now, fascinating little story in history. He actually worked at Warren Buffett's grandfather's grocery store. Now, he never met Warren Buffett, didn't know Warren Buffett, but he worked at his grandfather's store. Talk about little synergy in life there. Later on, he would drop out of the University of Michigan to join the Army, became a second lieutenant, and then was perhaps one of the few individuals to get accepted to Harvard Law without an undergraduate degree, where he did graduate from Harvard Law. And Charlie was an avid student, avid reader, just focused on education and reading his whole life. You know, his formative years were characterized by this voracious desire for knowledge and a strong work ethic. It certainly laid the foundation for his future achievements and influence on Warren Buffett. In the 60s, Charlie Munger ventured out on his own. He decided to leave law and get into investment management. During those years, he ran a very, very successful firm. Now, in 59, he met Buffett at a dinner, and they began this process of communication. Buffett didn't formally work with Buffett during the 60s at all. He had his own investment partnership where he significantly outperformed the stock market during those years. But during these years, there was a lot of communication between Warren Buffett. They built a friendship. They were collaborating together. And Buffett remembers this time period as a time period where Munger and his wit and his knowledge really influenced how Warren Buffett started to see investing during these years, even though they didn't formally work with one another. I want you to imagine something here. Imagine you are trying to get good at a sport. You would practice that sport a lot, wouldn't you? But you might also work out in the gym to build strength, do some yoga to improve flexibility, and maybe even study a bit of psychology to boost your mental game. All of these different activities contribute to making you a better athlete overall, even though they are not all directly practicing the sport itself. In the same way, being good at investing isn't just about understanding money. It helps to know a bit about lots of things, like how businesses work, what makes people buy certain products, or even how new technology is changing the world. Charlie Munger showed Warren Buffett that being curious and learning about a wide range of topics could help them make smarter investment choices. It's like seeing the investment world in full color instead of just black and white. By understanding a little bit about a lot of different subjects, they could spot opportunities and risks that others might miss, leading to better decisions and ultimately more success. A little known fact about the history of Warren Buffett is Buffett was very much a kind of a mercenary value investor in the early days. He referred to this view of short-term profits. Can't lose. I might not win big, but I can't lose as cigar butt investing. His words, not mine. And Munger, the architect, well, he transformed this to focus on high quality business. There's so many lessons that we can learn here. Warren Buffett's acknowledgement of Charlie Munger's influence underscores a critical lesson in the world of investing: the necessity of adapting and evolving strategies to prioritize quality and long-term value. Buffett's reference to his own cigar butt habits symbolizes a mindset focused on short-term gains and undervalued, but ultimately deteriorating assets. Charlie Munger's intervention marked a pivotal moment in Buffett's investment journey. By challenging Buffett's entrenched approach and advocating for a shift towards quality businesses with sustained profitability, Munger catalyzed a fundamental transformation in their investment philosophy. Munger's influence spurred Buffett to break free from the limitations of his old habits and chart a course towards building a business empire renowned for its size and enduring profitability. Ultimately, this lesson extends beyond the realm of investing. It's a testament to the importance of continuous learning, adaptation, and the willingness to challenge conventional wisdom in pursuit of long-term success. Munger's role in reshaping Buffett's investment approach serves as a powerful reminder of the transformative impact that mentorship and a willingness to evolve can have on one's journey towards achieving excellence. Charlie Munger's investment philosophy emphasizes the importance of identifying high-quality companies trading at reasonable prices. It's not just about chasing popular stocks, but meticulously evaluating a company's fundamentals. Munger highlights the necessity of patience and discipline, waiting for opportunities to invest when prices offer a margin of safety. This principle, known as the margin of safety, provides a buffer against market volatility and enhances long-term returns. Munger's lesson underscores the importance of balancing quality and price, guiding investors to build wealth steadily and sustainably over time with diligence, prudence, and a long-term perspective. Warren Buffett commented on this when he said, "Charlie promptly advised me, forget about ever buying another company like Berkshire. Add to it wonderful businesses purchased at fair prices." I think it's important to emphasize the architect, where Buffett was only the general contractor. What the architect did here was the emphasis on focus over diversification. This played a amazingly important role in Berkshire's portfolio allocation in the coming years of focusing on those great companies. But if there aren't a ton of great companies, let's focus and be oversized on the ones we identify. Diversification was not an important criteria, to say the least, to Charlie Munger. When you look back in history, the pivot on the transformation of Warren Buffett thinking can be seen with the purchase of See's Candies. Now, See's Candies was not a cheap, undervalued stock. They had in price to sales, it was pretty high, actually. But they identified value here, a company that had great brand strength, customer loyalty, and quality. And so this purchase of See's Candies kind of marked a transformation, the official pivot, if you will, in Warren Buffett's actual investments. Overall, we've kept moving in the direction of better and better companies. Warren Buffett today is widely viewed as a long-term investor. Well, this was the influence of Charlie Munger in this transformation. Under this philosophy, time is your friend. If you've identified something that is fantastic that you got at a fair value, time is your friend for a wonderful business. That buy and hold mentality set in, patience, discipline, focused on quality, and the value and patience of long-term investing and thinking will manifest itself. Warren Buffett and Charlie Munger are known for some of the most legendary investments of all time. In future videos, we'll talk about some of these specific investments, such as Coca-Cola, and what made them so successful. But they were all made on some strict value investing principles. They were committed to buying at a reasonable price, identifying value. And then once they identified that value, well, they had a simple time frame. It was buy and hold. We've identified something awesome. We got a great price, which leads us to one of the most famous quotes of all time from Warren Buffett. Our favorite holding period is forever. Charlie might not have gotten an undergraduate degree, but this guy was a voracious reader, an avid student, was always learning, was always preaching education. Because if you're going to not believe in diversification and you're going to have this focus, you better understand every aspect of that business. Charlie Munger's investment philosophy emphasizes focus over diversification. Instead of spreading investments across a wide range of assets, Munger advocates for concentrating investments in high-quality opportunities that offer long-term growth potential. This approach prioritizes depth of understanding and conviction in selected investments, hence know what you own, over the dilution of returns that can come from diversification. Munger's lesson highlights the value of concentrated, focused portfolios built on quality and long-term growth prospects in which you have a really deep understanding. Charlie said, people think that if they have 100 stocks, they're investing more professionally than they are if they have 4 or 5 stocks. I regard this as insanity. Guess what? You don't know everything. I don't know everything. Charlie Munger was a genius. He didn't know everything. But his point emphasized on investing in what you do know, and sometimes you're going to miss out. Buffett famously missed out on investing in many technology companies during the dot-com bubble of the late 90s and early 2000s, right? There was a speculative frenzy in technology stocks. Tech stocks were skyrocketing, but Buffett avoided all this. Known for his conservative and value-oriented approach to investing, he avoided investing in technology companies during this time. His decision, and I think this is very important to understand, stemmed from his belief in investing within his circle of competence, which means focusing on industries and businesses that he understands and where he can accurately assess the long-term prospects and the intrinsic value of the companies. While Buffett recognized the potential of some technology companies, he openly admitted that he didn't fully understand their business models or how to evaluate their future earnings potential. As a result, he chose not to invest in many tech stocks, even as their prices soared. The lesson learned from Buffett's approach is that investors should stick to investing in areas they understand deeply and where they have a competitive advantage of knowledge. By staying within their circle of competence, investors can make more informed decisions, avoid speculative bubbles, and achieve better long-term results. Charlie said, the advantage of low-tech stocks for us is we think we understand it very well. What an amazing mentor Charlie Munger was to Warren Buffett. He helped guide Warren Buffett during his entire investment career. He was a foundational figure at early stages in this journey of Warren Buffett. They maintained that friendship. It flowered into a business partnership, and they both are legends. Many years later, Charlie became my partner, Warren Buffett said, in running Berkshire and repeatedly jerked me back to sanity when my old habits surfaced. He always played that mentor role for Warren Buffett. I genuinely enjoy doing this video on Charlie Munger. I have such respect for the man. And in our next video, we are going to discuss the principles of value investing. Now, as we've covered, value investing is a time-tested investing approach popularized by Benjamin Graham, Warren Buffett, and others. And we're going to discuss 2 central aspects to value investing. the buying of undervalued securities based on fundamental analysis, and then identifying the intrinsic value and buying assets below that level. Price is what you pay. Value is what you get. Thank you for watching this video. Do not forget to stay within your circle of competence and focus by hitting those like, share, and subscribe buttons. It helps us out a lot, and we truly would appreciate it.